Good morning everyone. Today I will be introducing you to Kaytex Fabric Private Limited, a name that has been shaping the fashion industry since its establishment in 1996. They started with just 7 shuttle-less rapier looms, has today grown into a leading textile manufacturer, like serving both the organized fashion industries and unbranded retail markets. Ktex has always believed in staying ahead of the curve from embracing modern weaving technology. In the very beginning, the company has continuously expanded and upgraded its capabilities. Let us talk about their innovations. Like in 2008, production capacity increased by 4 times. They launched Jaguar unit which creates high quality designs. Other than by 2010, Ktex has become a composite unit. They handle everything from raw material to final products. Like after 2008, the year followed brought remarkable innovations. Like tank capacity doubled and 5 times more Jaguar looms were added. They adopted digital printing technology, offering vibrant customizable fabrics. In 2021, Ktex launched Russia, a premium ethnic wearing brand. In 2023, embroidery facilities were added for detailed artistic designs. In 2024, they launched a ethnic wearing brand like which are which is affordable and for unbranded markets of North India. They launched Darbare Khas. Like Ktex is more than just a fabric manufacturer, it is an innovation driving partner for brands, designers, and retailers, combining technology, craftsmanship, and market reach. Now, we will discussing the missions and visions of a company. Like their goal is to support fashion brands by giving them high quality fabric quickly with flexibility with and using modern innovative methods. They want to make it easier for brands its design, produce and grow successfully. And when fashion even when fashion trends change rapidly year by year, their their aim to be a world leader in textiles by offering fabrics that are creative, top quality and environment friendly. Like they want to connect with premium fashion market, like with the budget market, so that stylish and well made clothing is affordable and accessible for everyone. Like from a small start in 1996, Ktex has become an industry leader by always improving, embracing new technologies, and understanding market needs. They go beyond just making fabrics. They help shape the future of fashion. Now let us discuss about IPO. Like what is IPO? An initial public offering. IPO is the process through which a private company became public by selling its stock on a stock exchange. Like private corporation engages with investment markets to introduce their shares to the public market, with necessitates extensive due diligence, marketing and regulated companies.
So let's discuss the overview of Ktex Limited IPO. The total size of this IPO was 69.81 crore. Now, this amount came into two ways. First, fresh issue. This is when the company creates brand new shares and sell them in the market. Ktex, this is for 31.99 lakh shares. Second, offer for sale. This is when the existing shareholders sell their shares in the market. In this IPO, they sold 6.79 lakh shares through OFS, that is offer for sale. Now, the IPO share issued happened are before few days ago. First, binding open date 29 July 2025. Binding close date 31st July 2025. Allotment announced 1st August 2025. Refund and credit shares 4th August 2025. Listing date on the NSE SME platform is 5th August 2025. Now, for those who don't know what is NSE SME, it is a national stock exchange for small and medium sized enterprises. The company offers its shares in price band of 171 to 180 rupees per share. The minimum lot size of the shares was 800 shares, so you had to invest minimum 1,44,000 in one lot. It means it is not for the small investors like us. It is for the people who are ready to invest for large amount of money. And the IPO share were not given to everyone equally. It is split among these candidates. First, anchor investors. These are the big players who took some shares before IPO opens. 25.78 reserved for them. Second, qualified institutional buyer QIB. Large institutionals like banks, mutual funds, and etc. 14.32% shares in this IPO. Third, non-institutional investors, high net worth individuals. The share is 20.85%. And last, retail individual investor, regular individual like us, is 34.03%. This IPO got a huge response. Retail investor applied 47.85 times more than shares than available for them in the market. QIB, qualified institutional buyers, applied 31.16 times more than the offer. Non-institutional investors (NIIs) applied 35.02 more than. But the reality was totally different. On 5th August 2025, the shares are listed at rupees 144 per share, which was 20% lower than the issue price of 180 rupees. So, even though the IPO was highly demanded in the market, the listing was disappointed the investors. It's a reminder that IPO's higher demand doesn't mean it guarantees profit to investors.
Today I will be talking about the objectives of the Kaytex Fabrics Limited IPO. The company has planned to use the funds raised from this IPO for four major purposes. Let me explain them one by one. First, the company wants to expand its warehousing infrastructure. For this, it will construct a new warehouse in Amritsar, Punjab, covering about 19 square feet. This warehouse will help the company store more raw materials and finished goods. It will also make their operations smoother and more efficient in weaving, processing, and digital printing divisions. Second, the company plans to set up a dedicated sales office in Amritsar. This office will strengthen customer engagement and support better coordination between the production and sales team. By doing this, the company will be able to respond quickly to clients and provide better service, especially in northern India. Third, Kaytex Fabrics will upgrade its existing manufacturing unit. It will purchase and install advanced fabric processing systems. These upgrades will improve digital printing, dyeing, and finishing. As a result, the company will be able to meet the growing demand for a high quality and customizable textile products. Finally, the company will also use part of the IPO proceeds for working capital needs. This means it will invest in raw materials such as yarns, dyes, and chemicals, and also manage its receivables and inventories more effectively. This step will ensure operation and help the company handle its expanding product portfolio. So in short, the main objectives of Kaytex Fabrics IPO are expansion of warehousing, establishment of sales office, upgrading the manufacturing unit, and supporting working capital. Through these steps, the company aims to strengthen its infrastructure, improve efficiency, enhance product quality, and build a stronger customer relationship. Now I will explain you to how to apply for the Kaytex Fabrics IPO online.
through Angel One. The process is very simple and can be done in just a few steps. Step 1. First, log into your Angel account. You can either open the Angel One app or the website and enter your login details. Step 2. Next, go to the IPO section on the platform. You will easily find the IPO option. Step 3. After that, select the IPO you want from the list of open IPOs. Choose Kaytex Fabrics IPO. Step 4. Now enter the lot size. This means you have to specify the number of lots you want to bid for. Step 5. Then submit your UPI ID. By entering your UPI ID, you link your payment method and submit the IPO application. Step 6. Finally approve the funds. You will receive a request on your UPI app. Just approve it by entering your UPI PIN and your application will be complete. So in short, by following these 6 steps, log in, locate IPO section, select IPO, enter lot size, submit UPI ID and above funds, you can easily apply for the Kaytex Fabrics IPO online. Thank you.
Let's talk about key performance indicator of the company. Let's understand market capitalization. It is total value of company's shares, that is 264.59 crores. First is return on equity, that is 40.43%. So it is how much profit the company make from the shareholders money. Let's say कंपनी हर एक शेयर होल्डर से 100 रुपीज़ लेती है, तो उसमें से जो 40.43 रुपीज़ होगा वो कंपनी का प्रॉफिट होगा. Now the second is ROCE, return on capital employed. How much profit company make from both the shareholders money and the borrowed money. It is 33.25%. Debt equity ratio is 0.76. Generally ये 1 के अंडर होता है तो it is usually considered safe. RONW is return on net worth. It is almost same to ROA, return on equity. It is how much profit company make as compared to the shareholders money, and it is 33.76%, which is also a good percentage. Profit after tax PAT, it is 11.06%. इट इज़ कि अपने इंटरेस्ट एक्सपेंस और टैक्स पे करने के बाद अपने पास जो भी अमाउंट बचता है वो अपना प्रॉफिट होता है. फिर आता है एबिट. इट इज़ अर्निंग बिफोर इंटरेस्ट टैक्स डेप्रिसिएशन एंड अमोर्टाइजेशन. इट्स परसेंटेज इज़ 19.68%. ये अपना होता है कि यूजुअली ऑपरेटिंग प्रॉफिट कितना है, अपनी अर्निंग्स कितनी है इंक्लूडिंग एक्सपेंसेस. Price to book value is 4.13. It compares the market value of the share and book value of the share. Let's say company की जो book value है ₹1 है. So market is ready to pay and willing to pay 4.13 rupees for that ₹1 because investors expect strong growth in future profits and they have confidence in their management and the company's brand. As we shown in this table, earning per share is dropped down from 14.70 rupees to 11.50 rupees. But why? Because company ने market में भी और shares issue करा है. It's mean कि profit will be distributed among more persons and more shareholders. Now the PE ratio. PE ratio though increased from 12.25 to 15.65 because the market price of the share is went up because investors are willing to pay more and they have confidence regarding the company's profit, company's growth, company's future position, so they are willing to pay more. Now let's talk about the financial performance of the company. In this table, as we see, assets are increasing regularly over the last 3 years. It means company is expanding its capacity and its resource. Total income has also increased from 99.34 crores to 153.22 crores. It means company is selling its more and more products. Now we will talk about the financial performance of the company. In this table, as we see, assets are increasing regularly over the last 3 years. Its main company is expanding its capacity and its resources. Total income. Now, total income of 2023, that is 99.34 crores, has jumped to 153.22 crores in 2025. It means companies are selling its more and more products. So profit is also increased. PAT has been rose by 49% between the financial year 24 and 2025. EBITDA, that is earning before interest, tax, depreciation and amortization, has regularly increasing over the last 3 years. Net worth of the company has doubled in the last 2 years. It means company's balance sheet is strong and companies has a strong shareholder value. Reserves and surplus is 38.57 crores in 2025, and as we see it is regularly increasing. It means companies are saving profits for future stability. Now, the total borrowings is 38.15 crores in 2025. As we see, it is also increasing regularly, but the debt equity ratio is 0.76, means the financial risk of the company is down. As concluding, it means company is performing good overall.
Today we are talking about Kaytex Fabric IPO. I will quickly walk you through its strength, risk and what investors should keep in mind. Let's get started. So what is the strength of Kaytex Fabric IPO? First, one-stop solution. Kaytex offers multiple digital printing services under one roof. That means customers save both time and cost. Second is early adopter of technology. They were quick to adopt digital printing in textiles, which gives them a competitive edge in the market. Third is wide market reach. Their products are sold everywhere from big tier 1 cities to rural areas and in both branded and unbranded segments. Fourth is strong distribution networks. They have a solid network of distributors and long term relationships with suppliers, so their supply chain is reliable. And the fifth point is healthy financial performance. The company has shown stable revenue and profit in certain years. Then the sixth point is experienced management team. The leadership has a proven track record in the textile industry. Then the sixth point is diversified product portfolio. Kaytex offer a wide range of fabrics and designs, catering to multiple customer segments from fashion brands to wholesalers and unbranded markets. This diversification reduces dependence on any one product line. Then the next point is focus on cost efficiency. Digital printing reduces wastage of dyes, water, and fabric compared to traditional printing. This helps Kaytex maintain better margin and cost competitiveness. Then the next point is brand relationships and customer trust. Kaytex have long standing relations not only with suppliers but also with many retailers and wholesalers, giving it repeat business and stable demand. Then what's the next point? Industry growth. India's textile market is expected to grow strongly in the coming years, both domestically and in exports. Being in this sector gives Kaytex a natural growth opportunities. In short, Kaytex has strong operations, technology advantage and market coverage. Now let's discuss about risk in Kaytex Fabric IPO. Every investment also has some risk. So what should they? Let's discuss about. So the first point is geographic dependence. Most of their revenue comes from northern India. If demand in that region slow down, it can affect the company badly. Then the second point is high working capital needs. Their business requires a lot of fund to operate and they have limited financial operations. So the third point is fast fashion volatility. Fashion trends change quickly. If they can't keep up, sales could drop. Fourth is new technology risk. Digital printing is still new for them, so there could be initial operation challenge. Then the fifth point is supplier dependence. They rely heavily on a few key suppliers and don't have long-term raw material agreement, which can cause cost or supply problem. So while Kaytex has strong points, these risks could affect growth and stability. So what's the conclusion of this? Kaytex Fabric is a tech-driven textile company with good market reach, strong finances, and experienced management. But it also faces risks like regional dependency, changing fashion trends, and supply chain challenges. So, for the investors, this IPO looks like a growth opportunity with moderate risk. So, as always, do your research and consider your risk appetite before investing. For long term investors, Kaytex look promising thanks to its technology, strong operations, and position in a growing industry. If you can handle risk, it could be a good textile sector bet. For short term or listing gain investors, the IPO was a disappointment. Despite high subscription, the stock listed 20% lower. This shows the IPO price may have some too aggressive. Overall, it is not a guaranteed quick profit, but potentially rewarding in a long run. So, in a Kaytex Fabric IPO, the investor should invest in a long run, not in a short run, because in this, quick profit is not surely being given, but in long run, it should be good.
Hello everyone. I, Nishra Singh, is here to discuss about some insight of the company Kaytex Fabrics Limited and the impact of the stock market on its performance. Before listing, the investor estimated was clearly positive, and the grey market premium or the GMP suggested that the stock market list at 22% premium and around rupees 220 compared to the issue price of rupees 180. Some conservative estimates, however, predicted only a modest 8% premium. This variation reflects both optimism and driven by the company's expectations plan and caution as the market conditions remain uncertain. The oversubscription figures painted a very bright picture. The IPO was oversubscribed 40 times overall, with the retail investors subscribing nearly 48 times and qualified institutional buyers 31 times and non-institutional investors 35 times. Such strong oversubscription signaled tremendous interest and confidence in the company's prospectus across all the categories in the investors. Yet on August 5, the reality differed from the expectation. Instead of listing at a premium, Kaytex Fabric deducted weekly at Rs 144, which was 20% below the IPO price. Post-listing, the stock traded in the range of Rs 136 rupees and 80 paise to 151 rupees and 20 paise, gained only 2% from its listing price. Clearly, despite strong demand and JMP speculation, caution overall, the market estimate weighted heavily on its performance. From this, we learn an important lesson. The constraint between the bullish pre-listing estimate and the weak actual performance show that the market condition, liquidity, and timing play a decisive role in IPO success. Even fundamentally strong companies can struggle if the broader estimate is unfavorable. For investors, it remained us to temper expectations, and for issuers, it stressed the importance of timing and IPO in alignment with the market mood. Now we'll talk about the internal impact of the IPO on Kaytex Fabric Limited. The first major impact was on the company's capital and financial strength. Though the IPO Kaytex raise was Rs 130 crores entirely by the fresh issue, this cash flow of funds strengthened his equity base and reduced the dependency on debt and created a strong balance sheet. Secondly, the IPO supported growth and expansion. The funds are being used to expand manufacturing capacity in weaving, processing, and garmenting. A proportion is allotted to the working capital needs, ensuring smooth operation and timely execution of orders. With this financial boost, Kaytex is now in the position of scale, further explore new product lines, and adopt better technology. Another internal impact is credible and branding. Becoming the listed company enhanced trust among customers, suppliers, and financial institutions. It was the strengthened and cooperative image given Kaytex high visibility in the textile industry. In terms of governance and compliance, listing on the NSE and CME requires the company to follow SEBI regulation, corporate government norms, and regulation disclosure. This enforces greater transparency and accountability within the organization. However, the IPO also brought changes in ownership and control. Promoters dilute a part of their stake, which means they now share ownership with public. While this reduces absolute control, it also reverses shareholding and investors' great investor participation. Lastly, there is an employee motivator factor. A successful IPO builds pride among employees and in future may lead to the stock option opportunities, further align their interest with the company's growth. In summary, the IPO Kaytex Fabric Limited not only strengthened the finance but also enhanced the credibility, governance, and internal motivation, though with a trade of reduced promoters' control and higher compliance obligation. Thank you very much for giving your time to me.
Now we will compare two textile companies and we will see that how two companies from the same sector can experience drastically different IPO outcomes. First, we will learn Arvind Fashion Limited entered the market with a diversified portfolio of brands but struggled due to high debt, operational insufficiencies, and weak brand dominance. Its IPO saw only moderate subscription and a weak listing, which reflected investors' cautious outlook. Page Industries represent how focused strategy and brand power can perform a textile IPO into a massive long-term wealth creator. In contrast, Page Industries Limited, the exclusive licensee of Jockey brand in India, demonstrated the power of brand monopoly and niche positioning by focusing on premium and innerwear and maintaining consistent product quality. Page Industries created strong consumer loyalty. Its IPO not only gained traction at launch but also delivered extraordinary long-term return, turning into one of the best performing textile stocks in India. The key lesson is that within the textile sector, not all IPOs are equal. Success depends on a company's ability to combine financial stability, strong branding, efficient operations, and clear market positioning. Investors favor companies that show sustainable profitability and a clear competitive edge rather than those with scattered brand portfolios and financial strengths. Therefore, while Arvind's IPO serves as a cautionary tale about our diversification and debit burden, Page Industries represent how focused strategy and brand power can perform a textile IPO into a massive long-term wealth creator. In conclusion, we can say that the initial public offerings plays a crucial role in the financial growth and expansion of a company. By going public, a company gains access to wider capital, strengthens its market presence, and enhance its credibility among investors. However, the success of an IPO depends not only on the subscription and market performance, but also on the company's vision, mission, and ability to sustain growth in a competitive environment. From the analysis, it is clear that while IPOs provide great opportunities for companies and investors, they also come with challenges such as market volatility, regulatory compliance, and maintaining investor trust. The long-term impact on the market and the company's internal structure depends on strategic planning, transparency, and consistent performance. Thus, an IPO should not be seen merely as a fundraising event but a transformational step towards future growth, stability, and value creation. Companies that align their objectives with investor expectations are more likely to achieve sustainable success.